Okay, sweet. Yes, my people, what is happening? Welcome back to the channel. Today, I'm just going to be going through a quick trade recap from yesterday. The trade that I took was this position right here. Let's go to the 1 minute quickly. You can see it a lot better. This was the position that we took, yesterday. Just over a 1 to 5 across 3 funded accounts, two of them being the QT funded accounts that I started this week. We actually started off on them QT accounts with a losing 2 days. So the profit that I made yesterday has crawled us back to break even, which is good. And yeah, I'm ready to start basically fresh on these accounts now. So that is the power of risk management. Now, when observing this position, yeah, let me go from start to finish. As you can see, they got a few things going on here, yeah. So let's break down this position exactly from how I was anticipating it. So yesterday, come to the charts at New York Open just before macro session, ready to trade. And first thing that I did, of course, none of this was here at that point. I was anticipating price to come and create a lower high on the higher time frames for us to then push up again. And my aim was to catch a sweep of London highs, which was this sweep right here, and then trade down to either London low or a reasonable target, which I was happy with. And I took my profits way before London low. If I took profits at London low, I would have made too much. That would have blown the account for the consistency. Well, not blown it, but yeah, if you understand the consistency rule on futures accounts, then you'll know exactly what I mean. You can only make a certain amount on challenge accounts to prove that you're a consistent trader. So first thing that I done was obtain my bias, yeah. I'm looking at hourly market structure and 4-hour market structure, yeah. Clearly, we're fucking bullish, okay? But price hadn't created a lower high from this move yet, okay? So I drew my fib levels from swing low to the swing high, and the swing high at that point was London high here, yeah. So of course, none of this data was here before that. And when I come to the chart, I drew my swing low from here to my swing high all the way up here and observed that, okay, we have 4-hour fair value gap here. We've also got multiple 1-hour fair value gaps in this region too. So it's a nice area within the golden ratio on the fib levels for us to actually come down and give us a take profit to then at least move back up. So my anticipation on the day was I wanted to trade to the higher low here. So I'm trading alongside the hourly timeframes here. I'm essentially observing where the hourly is going to go next and then trading alongside that. So the trade that I took was during macro session. Of course, first thing that I do after gathering my bias would be marking up the session opens and session closes. So you've got London Open here. Let's mark them out so that it's all clear for everyone. We've got New York Open here, which is the Forex Open. But the main open that we're interested in is the New York Stock Exchange Open, which is at 1:30 in the UK currently as the clocks have just gone back. So, boom, there it is, 1:30. And then you've got New York SE Stock Exchange Open. So these are the 3 opens that I'm looking at, okay? Essentially, I'm getting my trading targets from London session, which is here. So I mark out London high and I mark out London low. Cool. I can mark these on the chart as well as London low and London highs. So essentially, because I've got a bearish bias for the day and I'm trying to trade to this higher low, which of course we perfectly hit, I was looking for a sweep of London highs, which would be this right here, and then play out my strategy. So my strategy is as follows. I've broken it down many times on this channel. I'm looking for a sweep of liquidity forward paired with a 5-minute break of the previous candle. So this break here was good enough for me to be interested in playing out the rest of the strategy. So we had our sweep on the 5-minute and then we had our 5-minute break. That's the first part of my strategy confirmed. Next job is for me to drop onto the 1-minute time frame and look for a potential entry after this sweep. So what I did and what I do every single time is as follows. I come to where the break was, which is this line that we just marked out here. I can do BOS 5 min. Cool. So now we know that this line here was that break of structure on the 5-minute time frame. Okay. So with that being said, normally when you get that 5-minute break, it leaves you with some fair value gaps that you can target, okay? Now, as you can see, we've got one fair value gap here and one fair value gap here. Now, when I was looking to enter my position, of course, there's two fair value gaps here. This one here got respected for a good 30 minutes, yeah? So I'm sitting here contemplating, okay, do I just rush my position now and get in here? I don't want to miss the trade, blah, blah, blah. But instead of rushing your position, yeah, what I like to do is observe Fibonacci levels on the 1 minute time frame also. So I'll draw it from the swing high to the swing low here. And then I can see that we've got a lovely golden ratio for the deepest retracement right inside of this fair value gap here. So at that point, I stick to my guns and I said, okay, cool, I'm not entering my position until price hits here. And in fact, I set a sell limit. So I set a sell limit right at this level here with my stop loss just above the 7-9 ratio. And then I targeted just below this wick here, which is a nice take profit level, draw on liquidity. So I was just below this wick here, right below all of this liquidity here. So that was my take profit level right there. I was looking for price to wick below this, take me out in profit. So of course, that's exactly what happened. Yeah, we had price come back, tap that 705 level right inside of that lovely fair value gap on the 1 minute, which occurred at that 5 minute break. This is an ideal situation for me. And then I'll aim for a 1 to 3 normally. Yeah, but normally I'm aiming for London lows, which would have been an 8R trade, which would have been a lovely trade. But yesterday we had FOMC. You can't trade during news on FOMC. I didn't want my take profit to get hit on FOMC because I would have breached my account with Quantecal, as they've got a trading rule which states you cannot trade 2 minutes before or 2 minutes after news. And if you have a set take profit and your take profit gets hit during a news event, then you do have a hard breach on your account. So for me, a 1 to 5 is fucking more than enough, and I could get out at a lot safer level. You know, when I draw my take profit to London low and it's a 1 to 10, 1 to 8, 1 to 15, God forbid, I'm happy with taking less of a risk to reward position and having more of a probability to actually make profit that day, okay? It's not about trying to catch the biggest trade every single fucking day. It's about taking what the market is giving you, okay? And it's not always smart to aim for these massive fucking trades, you know? Even it would have been smarter for me to take out 1 to 3 here, you know? And reason why I did aim for the 1 to 5 being I was in losses. So, you know, that would have been sweet. And I thought that that price was going to come all the way to London low. So for me, I'm already being less greedy, you know, being in drawdown. I could have been 3% in profit after that. But again, you can only make a certain amount of money on your challenge phase with the consistency rule, weighing everything up. It's smarter to just take my profit at the sensible level, just in case we even have a reversal, because also we're trading at all-time highs as well. So for inexperienced traders, it's not very smart to trade against all-time highs, to sell in an all-time high market. It's much more probable to take buys in this market style. But I'm a fucking pro, I know what I'm doing, and it was staring me in my face. So I took that shit. And I took it on both my QT funded accounts. So both of them are nice and sitting right back at break even essentially now. And that's what I like to see, because next week I'm going to come in the market strong and these accounts will get absolutely rinsed. So yeah, that was a trade that we took yesterday. Pitch perfect setup, lovely within the strategy, 1 to 5R, you know, can't complain with that. Across 3 funded accounts as well. And yeah, you know, it's like clockwork. It's the same trade, the same setup that I post every single time I do a trade recap. You know, you're not going to see me do anything different. This is the bread and butter. This is exactly what I'm doing. I've got breakdowns on my channel with this. I've got a 3-hour fucking course where I explain to you exactly every single confirmation that I use in here in depth. So if you want to replicate this for yourself, trust me, the value is there for you on that YouTube channel. Don't fuck around with it. Get involved and get trading, boys. But yeah, that's a trade recap for today. Lovely little 1 to 5 yesterday, and we'll see what the market brings us today.